This week, 3 stories are quietly rewiring the market: a record index rebalance, a Microsoft and Nvidia alliance, and a SpaceX IPO that is rewriting the rules. Let's go straight to what the numbers say. The S&P 500 just closed out a 9-week win streak. SPY made a new all-time high on Friday at $758.08. It is now up 20.47% from the March 30th lows. But minutes before the close, Nvidia sold off hard. Here is why. MSCI, the company behind some of the world's most important indexes, ran its largest rebalance ever. Roughly $33 billion in trades changed hands. Flows that big create sharp volatility into the closing bell, as funds sell their recent winners. So where did the rebalancing money go? Software stocks were the prime beneficiary. The software ETF IGV posted its biggest day since the April 2025 low. Microsoft is the heaviest weighted stock in that group. Over the weekend, Microsoft and Nvidia unveiled the first Windows PCs running Nvidia chips as the primary processor. That cracks open an entirely new multi-billion-dollar market for Nvidia outside the data center. Both companies have major events next week. Nvidia takes the stage at Computex and GDC in Taipei, June 1st through 5th. Microsoft's Build conference runs June 2nd and 3rd in San Francisco. The hardware ecosystem looks ready to go on the offensive. Now the story that actually changes the rules. The SpaceX IPO. Index providers have waived the profitability requirement and slashed the seasoning window. Normally, the S&P 500 demands 12 months of trading and 4 straight profitable quarters. Both requirements were waived. The Nasdaq cut its inclusion window from 90 trading days to 15. The Russell cut its window from 90 days all the way to 5. Here is what that means in practice. More than $30 trillion in passive and retirement money will effectively be forced to buy SpaceX at IPO valuations. Bloomberg Intelligence estimates S&P 500 funds alone must absorb 19% of SpaceX's float within 6 months. Russell 1000 and Nasdaq 100 funds would absorb another 24%. These rules existed to protect passive investors. Here, they were set aside, and the IPO is set for June 12th. Some space-themed funds have already been bid up into it. The ticker DXYZ holds a 14.5% weight in SpaceX, alongside stakes in Anthropic, OpenAI, and Databricks. Another, the ticker NASA, is an ETF built around space stocks, with SpaceX at a 6.54% weight. 2 names that will be on every screen for the next 2 weeks. Now to oil, and the geopolitics underneath it. Japan just posted the largest crude reserve drawdown in its history. Japan still holds meaningful reserves, more than 200 days, but this was its largest ever release, more than 80 million barrels, with follow-on taps. And the US and Iran deal is getting more complicated, not less. Iran's chief negotiator says there is no deal unless it fully secures Iranian rights, and made clear the trust is not there. President Trump said he is in no hurry, and that if terms are not met, it ends a different way. The New York Times reports the administration sent back a tougher proposal. Meanwhile, Israel expanded its ground assault in Lebanon, its deepest push in 25 years. We are 93 days into this war. If oil stays elevated, it becomes the elephant in the room markets can't keep ignoring. So what is actually moving underneath the headlines? The rotation into beaten-down software was the clearest signal. Salesforce rose 8.5% Friday, and is still down about 50% from its highs. ServiceNow climbed more than 14%. Intel, by contrast, closed down over 5%, as the Microsoft and Nvidia hardware push raises questions about its chips. Then there is the week ahead. Broadcom reports Wednesday after the close, the 7th heaviest stock in the S&P 500, and Friday brings the jobs report, 1 hour before the open. The big psychological level traders are watching on the S&P is 758. Above it, the breakout stays intact. Below it, the channel gets tested. Zoom out. A record rebalance reshuffled the board. Microsoft and Nvidia opened a new hardware front, and the SpaceX IPO bent the index rules that passive money is built on. None of this is a recommendation. It is what the filings, the flows, and the calendar are showing. Watch the levels. Read the rules. That is your UFSM update.